Welcome back to the deep dive. This time, we're going deep on The Simple Path to Wealth. It's by J.L. Collins. And this book really kind of shook up personal finance. I'm joined by Olivia Smith. She's a financial expert, and she's here to help us unpack all this.
It's great to be here.
So, The Simple Path to Wealth, kind of self-explanatory.
Yeah.
Ah! There's a lot more to it than just like saving a few bucks.
Yeah.
This book is about building real wealth, like lasting wealth. And it does it in a way that's like surprisingly simple.
Yeah. Collins really cuts through all the noise, all the complexity you usually see in the financial world. He just presents a clear path that anyone can follow, regardless of background or income level.
I love that. It's about accessibility, right?
Yeah.
And empowerment.
Absolutely. One of the core ideas is this concept of FU money, which, as you can probably guess, is a pretty powerful idea.
Okay. I have to admit, that term definitely caught my attention.
Yeah.
Tell me more about this FU money.
Well, Collins defines it as the amount of money that gives you the freedom to just walk away from any job or situation you dislike. It's about having the financial security to make life choices that align with your values, not just your paycheck.
It's about options.
Yeah.
Having the power to say no
Yeah.
when you need to.
Exactly. It's about empowerment and flexibility. Collins shares a lot of stories from his own life where having FU money allowed him to negotiate better work conditions, take time off for travel and family, and ultimately achieve financial independence. It's not just about being rich. It's about having the freedom to live life on your own terms.
Now, you can't talk about financial freedom without talking about debt. I'm guessing Collins isn't a fan.
He's vehemently against it. Debt is the enemy of FU money, and he dedicates a lot of the book to explaining why debt traps you in this cycle of working. Just to pay off what you owe, it limits your options and just increases your stress.
It makes total sense. It's like you're constantly running just to stay in the same place,
Right.
never making any real progress.
That's a great way to put it. Collins actually shares his own experience with crippling credit card debt early in his life. It was a real wake-up call for him, and it taught him a valuable lesson about the true cost of borrowing.
So step one on the path to wealth is ditching the debt right, but let's be realistic. Things like mortgages and student loans are pretty common. Does Collins address that?
He does. He acknowledges that not all debt is created equal. He provides guidelines for managing debt based on interest rates. So paying off high-interest debt should be a priority, like credit cards. But he also suggests that lower interest debt, like some mortgages, can be managed strategically to free up funds for investments. It's about being smart and intentional with your debt.
Okay, so we're ditching the debt and we're building our FU money fund. What's next on the simple path to wealth?
Collins wants you to shift your mindset about money. Stop thinking about it in terms of what it can buy and focus on what it can earn.
So it's less about spending and more about making your money work for you.
Precisely. He introduces this concept of opportunity cost. Every dollar you spend today is a dollar that could have been invested and grown over time. Imagine what that small amount could turn into in 10, 20, even 30 years. It's about making conscious decisions about where your money goes and understanding the long-term impact of those choices.
That's a really powerful way to look at things.
Yeah.
So once we've got our spending under control and some cash freed up, where does Collins suggest we put it to work?
He's a big advocate for investing, and he keeps it surprisingly simple. He's all about index funds.
Okay, index funds, they're popular. But I think a lot of people still find the whole world of investing pretty intimidating.
I understand. But what I appreciate about Collins is he breaks it down in a way that makes it accessible to everyone, regardless of experience. Index funds, particularly those that track the stock market, offer a straightforward and effective way to participate in the long-term growth of the economy. You're essentially buying a tiny piece of thousands of companies all at once.
So instead of trying to pick individual winning stocks, you're spreading your bets across the whole market.
Exactly. And he explains that this is often a smarter strategy than trying to beat the market through stock picking or actively managed funds, especially when you factor in fees.
Interesting. So he's saying that trying to outsmart the market is usually a losing game.
He doesn't quite say it like that, but that's the general idea. He cites a lot of research that shows that the majority of actively managed funds actually underperform the market over time. And that's even with all their fancy algorithms and teams of analysts.
I'm starting to see the beauty of simplicity. But what about all the risks we hear about? With the stock market, those crashes and corrections can seem pretty scary.
They can be, but Collins tackles that head on. He acknowledges that the stock market is volatile, Crashes and corrections are inevitable. They're part of the cycle. But trying to time the market, jumping in and out based on fear, is a losing strategy in the long run.
So ride the waves and trust in the long-term upward trend.
That's a key takeaway. He uses historical data and examples to illustrate that the market has always recovered from downturns, and that over the long term, the trend is upward. Time, not timing, is your greatest asset when it comes to investing.
Okay, I'm starting to see the logic here. But if you're putting all your money into one index fund, doesn't that seem a bit risky? What about diversification?
It's a valid concern, but Collins addresses that head on. He actually uses a great analogy, comparing the daily market fluctuations to the foam on a beer. He argues that for most investors, a well-diversified index fund, like Vanguard's Total Stock Market Index Fund, it's known as VTSAX, is sufficient to capture the market growth without getting bogged down in the foam.
So we don't need to get fancy with complex strategies. We can keep it simple.
Exactly. He believes that sticking with the SALT, a simple low-cost index fund, is the most effective path to long-term wealth. It's about letting the market do the work for you.
That's a relief. But wait, what about bonds? Aren't those supposed to be part of a balanced portfolio? Especially as we get closer to retirement.
You're right. Bonds are often seen as a crucial component. Collins is a big proponent of stocks for wealth building, but he does acknowledge the role bonds can play.
So where do they fit into this simple path?
He recommends incorporating bonds gradually as you approach retirement or as your tolerance for risk changes. He sees bonds as a way to smooth out volatility in the stock market and provide a buffer against deflation.
So the mix of stocks and bonds
Yeah.
in your portfolio would change depending on your age
Right.
and how much risk you're comfortable with.
Exactly. Collins outlines two main portfolio models: the wealth accumulation portfolio, for those in their younger years, which is 100% stocks, and the wealth preservation portfolio, for those closer to retirement, which is 75% stocks and 25% bonds.
So we've got our investment strategy sorted, but I'm guessing there are still taxes to think about. Is there a way to shield our investments from the tax man?
Absolutely. And that's where tax-advantaged accounts come in. Collins dedicates a whole chapter to these, explaining how they can supercharge your wealth building.
There seem to be so many different options. 401ks, IRAs, Roth IRAs. It can feel overwhelming figuring out which ones are right for you.
It definitely can be, but Collins breaks it down in a way that makes it easy to understand. He explains the benefits of each account and how to maximize your tax savings to accelerate wealth growth.
So these accounts let you invest and grow your money without being taxed on those gains until you withdraw it right.
That's the main benefit. But he also highlights some potential downsides like required minimum distributions or RMDs that kick in at a certain age. He offers some strategies to mitigate that impact.
So it's about understanding the nuances of each account and choosing the ones that align with your goals.
That's the key. He really emphasizes that maximizing past advantage savings is essential for building wealth, and he gives you a clear framework for navigating this often confusing landscape.
So we're building FU money, we're ditching debt, we're investing wisely, and we're using tax-advantaged accounts to supercharge our savings, what happens when we reach retirement, and are ready to enjoy the fruits of our labor.
That's where the famous 4% rule comes in. It's a guideline for how much you can withdraw from your investments each year without depleting your savings.
I've heard of the 4% rule, but could you break down exactly how it works?
It stems from the Trinity study, which analyzed historical stock market data to determine a safe withdrawal rate for retirees. The study found that withdrawing 4% of your portfolio each year and adjusting that amount for inflation had a high probability of making your money last at least 30 years in retirement.
That sounds reassuring. So it's about finding that sweet spot between enjoying your wealth and making sure it lasts.
Exactly. Collins shares his own experience, withdrawing more than 4%, emphasizing that the 4% rule is a starting point, not a rigid rule. It's about having a framework and adjusting it as needed.
Okay, so far we've covered a lot of ground, but I remember there's a part of the book where Collins talks about magic beans. What's that all about?
Yes, magic beans.
Yeah.
This is where Collins tackles some of those common financial myths and traps, those get-rich-quick schemes. He uses some great anecdotes, like the story of the man who sold magic beans. That supposedly grew into money trees, to illustrate the dangers of believing in easy solutions and ignoring sound financial principles.
It's about staying grounded and remembering that building true wealth takes patience and discipline.
Right. And knowledge. You have to understand how money works to make informed decisions.
We've covered a lot about building wealth, But what about giving back? Does Collins address charitable giving at all?
He does. He shares a story about how he and his wife funded a dinner for a group of teachers, Catholic school teachers, and it ended up having a ripple effect of generosity and positive outcomes that they never expected.
Okay, I love stories like that. What happened?
It turned out to be much more than just a dinner. Others were inspired to contribute, and the event grew, creating a real sense of community and shared joy. And it's through this story that Collins introduces the idea of setting up a charitable foundation.
Wait, you mean like the Bill and Melinda Gates Foundation? Don't you need to be a
Yeah.
billionaire to do that?
That's what I thought too. But Collins explains that anyone can set up a foundation, even with a modest amount of money. He walks you through setting up a donor-advised fund through Vanguard Charitable, highlighting the tax advantages and the power of amplifying your giving.
So using your wealth to make a difference.
Exactly. He encourages you to think beyond
Yeah.
your own financial well-being and consider how you can use your resources to contribute to causes you believe in.
Okay, there was another story that stuck with me. It was about Mook, the guy who bought a pineapple plantation in Tahiti without any farming experience. What was that all about?
Mook. That story perfectly illustrates the unexpected opportunities that can come your way when you have financial freedom and aren't afraid to take risks.
Remind me how that whole adventure unfolded.
So Mook and his friends, this group of recent college graduates, stumbled upon an ad for a pineapple plantation in Tahiti. They bought it without even seeing it, packed their bags, and set off on this grand adventure.
Wait, they bought a plantation without knowing anything about growing pineapples? That sounds like a recipe for disaster.
It was. They quickly realized they had no idea what they were doing, and the plantation was far from profitable. But that's where the story takes a turn.
I'm on the edge of my seat. What happened next?
They were in paradise, but kind of stuck. And then a local bank approached them about finishing a hotel that had been abandoned.
Wait, so they went from pineapples to hotel management. Did they even know how to run a hotel?
Nope. But they were willing to learn and adapt. And they ended up turning it into a successful business.
Wow, that's amazing. They stumbled into a whole new career path because they had the freedom to take a chance.
That's exactly what financial freedom allows you to do. It opens up possibilities you never even considered because you're not tied to a job just to make ends meet.
So what does all of this mean for our listener? Why should they care about the simple path to wealth?
This book is a roadmap to a life of financial independence. Imagine a life where you're not chained to a job you hate or burdened by debt. It's about taking control of your financial destiny and building a life of freedom and choice.
It's a powerful message. So if you're looking for a clear path to building wealth and achieving financial freedom, this book might be just what you need.
I definitely think so. It's an incredibly valuable resource for anyone who wants to simplify their finances, make smarter investment decisions, and design a life they love.
This has been a fantastic deep dive so far. We've covered a lot of the key takeaways
Yeah.
of the simple path to wealth, from FU money to index funds, the 4% rule, and even charitable giving.
It's been great discussing all of this. It's inspiring to see how these concepts can come together to create real freedom.
But before we move on to part 2, I want to leave our listener with something to think about. What would your life look like if you achieved financial freedom? What would you do with your time if you didn't have to worry about a paycheck?
It's a great question. What possibilities would open up if you had the financial security to take risks, travel, pursue your passions?
Imagine the impact you could make, the adventures you could have, the life you could create.
It's an exciting thought. And the simple path to wealth provides a framework for turning that dream into a reality.
Okay, we've only just scratched the surface of the simple path to wealth. Join us in part 2 as we continue our deep dive into this game-changing book.
It's amazing how just like shifting your perspective on money can make such a big difference, isn't it?
It really is. And speaking of perspective shifts, I know Collins also tackles some common misconceptions about index funds, like the idea that they're only for passive investors
Yeah.
who don't want to be like
Yeah.
actively involved in managing their money.
Yeah, you're right. Some people think you need to be constantly trading stocks to succeed. But Collins debunks that, explaining that index funds can be just as powerful for those who want to be more hands-on.
So how can you use index funds
Yeah.
if you want to be more involved?
He suggests a strategy called rebalancing, where you adjust the proportion of stocks and bonds in your portfolio periodically to maintain your desired asset allocation.
So let's say the stock market has like a phenomenal year and your stock holdings grow a lot. Would you sell some of those stocks And buy more bonds to rebalance.
Exactly. And the same goes for bonds. If bonds outperform stocks, you'd sell some bonds and buy more stocks. Rebalancing helps you capitalize on market fluctuations while still sticking to your strategy.
It sounds simple enough, but I imagine it required some discipline and attention.
It does. He recommends rebalancing about once a year, or whenever the market makes a big move. And he stresses that this is best done within tax-advantaged accounts to avoid capital gains taxes.
Okay, that makes sense.
Yeah,
Now, we've been talking a lot about the U.S. stock market, but what about investing beyond U.S. borders? Does Collins address international investing?
he does. While he believes that a total stock market index fund, like VTSIX, provides adequate international exposure for most investors, he acknowledges that some might want to diversify further.
So when might someone want to consider adding international exposure beyond VPSAX?
It depends on individual circumstances and risk tolerance, if you're looking to reduce risk and diversify across different global economies. Then adding an international index fund could make sense.
So for someone who's ready to go truly global, what would you recommend?
He recommends Vanguard's Total International Stock Market Index Fund, or VTWSSX. This fund invests in companies all over the world, excluding the U.S., giving your portfolio a broader reach.
That sounds like a solid option.
Yeah.
You know, we've mentioned Vanguard a lot, and Collins seems to be a big fan. I'm curious to know why. What sets Vanguard apart?
Vanguard is unique because they're owned by their investors. Think of it like a giant financial co-op. This means their interests are aligned with yours.
That sounds like a huge advantage.
It is. This ownership structure eliminates the conflict of interest that you see in other firms, where the company's profits and the investors' returns aren't always on the same page.
So everyone benefits together.
Exactly. Another thing that sets Vanguard apart is their commitment to low fees. Because they're owned by their investors, they're not driven by the need to generate profits. For shareholders, this allows them to keep fees low, which means more of your money stays invested and working for you.
Okay, low fees, and an ownership structure that puts investors first. It all sounds great, but are there any downsides to using Vanguard?
Collins addresses that. He knows some people worry about Vanguard's stability, especially when the market drops.
That's understandable. Especially after 2008, people want to know their investments are safe.
Absolutely. But Collins argues that Vanguard's structure actually makes them more resilient than traditional firms. Because they're not beholden to outside shareholders, they have more flexibility to navigate market storms and prioritize long-term interests.
Well, so while no investment is entirely risk-free, Vanguard's structure seems to offer some stability.
That's what Collins argues. And he encourages investors to look beyond the headlines and consider the factors that make Vanguard strong. He even jokes that unless you're anticipating a planet-ending catastrophe, your money is safe with Vanguard.
Well, that's good to know. But this book is basically a love letter to Vanguard. Some people might wonder if he's getting some kind of kickback.
He addresses that right up front. He makes it clear that he has no affiliation with Vanguard. They didn't even know he was writing the book, and he's not receiving anything from them.
So he genuinely believes that Vanguard offers the best options for investors based on his research and experience.
That's right. He's so convinced of their value, he's putting his reputation on the line.
Okay, we've covered investments, tax-advantaged accounts. Let's shift gears and talk about retirement.
It's the time to finally enjoy the rewards of all that hard work and saving.
Exactly. But retirement planning can feel overwhelming. Does Collins offer any guidance on how to approach it?
He does. And his approach is, as always, refreshingly simple. He walks you through the stages of retirement planning, starting with deciding when to start, drawing on your investments.
That's a big one. It's all about finding the balance between enjoying your wealth and making sure it lasts.
You got it. And Collins provides a clear framework for making those decisions, starting with the 4% rule.
We talked about that earlier, but I think it's worth revisiting. How does he suggest incorporating the 4% rule?
He explains that it's not a set-in-stone rule, but rather a starting point for figuring out a sustainable withdrawal rate based on your needs and risk tolerance.
So it's not just blindly withdrawing 4% every year.
No, it's about being flexible and making adjustments.
That makes sense. So let's say you're ready to start withdrawing. In retirement, how does Collins suggest you go about that?
He outlines a step-by-step approach. First, use any money in taxable accounts, then move on to traditional IRAs. Finally, start tapping into Roth IRAs, which have the added benefit of tax-free withdrawals.
Okay, that seems straightforward. But what about those required minimum distributions, the RMDs? That kick in at age 70 and a half.
They can. And Collins dedicates a whole chapter to explaining RMDs and offering strategies to minimize their impact. You'll need to be aware of those once you reach 70 and a half. But there are ways to plan ahead.
So he's not just painting a rosy picture of retirement, he's acknowledging the potential challenges.
He wants you to be prepared.
Well, preparedness is key.
Yeah.
You know, something I found really interesting was Collins' discussion of financial advisors. It's a topic that always sparks strong opinions.
It does, and Collins doesn't shy away. He's actually pretty critical of the industry as a whole.
He is. What's the basis for that?
He argues that a lot of advisors don't actually act in their clients' best interests. He believes many are incentivized to sell products that generate high commissions, rather than recommending investments that truly benefit their clients.
So it's a conflict of interest. They're putting their own gain first.
That's what he argues. And he points to the fact that many advisors rely on actively managed funds, which underperform and come with high fees.
So is he saying that we're better off managing our own money than trusting an advisor?
Essentially, yes. He believed that with effort and education, anyone can learn to manage their finances without paying those fees or being steered towards bad investments.
So it's about empowerment and self-reliance.
Exactly. He sees that as crucial for achieving true freedom.
This has been incredibly insightful. We're really uncovering the core principles of the simple path to wealth and building a roadmap to financial independence.
It's been a pleasure. These ideas are so important, and I love how Collins makes them accessible.
Me too. Before we move on to part 3, I'd like to touch on Collins' own journey into investing. It provides context.
Yes, his personal experience really adds to the book. He shares some valuable lessons.
Exactly. He talks about how he initially resisted index funds, convinced he could outsmart the market.
That's pretty common, especially for new investors.
Absolutely. But Collins explains how working at a firm, an investment research firm, changed his whole perspective.
I'm curious what shifted his thinking. What happened at the firm?
He had access to all kinds of insider info and those fancy analytical tools, but he realized that even with those resources, predicting which stocks would perform well was really difficult.
So even being surrounded by professionals and data didn't guarantee success.
That's the irony. He saw firsthand how efficient the market is. Trying to outsmart it is often a fool's errand.
It must have been quite humbling.
It was. And that's when he embraced index funds, realizing that trying to time the market was a recipe for frustration.
So his journey took him from skeptic to advocate.
Exactly. And it highlights the message of the book. Keep it simple. And don't try to outsmart the market.
That's a powerful lesson. But Collins doesn't stop at index funds. He dives into the psychology and explores how emotions influence our decisions.
You're right. Fear and greed can sabotage us. Does he offer strategies for overcoming those traps?
He does. He encourages readers to understand that market volatility is normal. Crashes are part of the cycle. It's important to focus on the long term rather than the short term.
So shift your perspective.
Exactly. He actually uses a really helpful analogy. He suggests visualizing the market as a giant beer. The foam on top represents those daily ups and downs, while the actual beer, the underlying businesses, represent long-term growth.
I love that analogy. It helps to reframe your focus.
Exactly. He wants you to see the big picture.
But even when you understand the market, those get-rich-quick schemes can still seem tempting.
You're so right, and Collins knows that. He dedicates a section of the book to debunking those myths and exposing those magic beans.
What are some of the magic beans he warns against?
He covers everything from penny stocks and day trading to timeshares and multi-level marketing schemes. He shows you the false promises behind these alluring offers.
So the takeaway is that building wealth takes patience and discipline.
Exactly. He wants to protect readers from those predators and empower them to make informed decisions.
Okay, but let's say you need professional guidance. Does Collins offer any advice on finding an advisor?
He does, and he provides criteria to evaluate potential advisors, including their fees, their philosophy, and their track record.
So it's about doing your homework.
That's key. He also stresses the importance of finding a fiduciary, meaning they're legally obligated to put your interests first.
That's important. But even with those guidelines, finding the right advisor can feel daunting.
They can be, but ultimately Collins reminds us that no one cares more about our money than we do. It's about taking ownership and empowering ourselves through education.
So while he offers guidance, he ultimately advocates for self-reliance.
Exactly. Knowledge is power.
This conversation has been so eye-opening. We've really delved into the core principles of the simple path to wealth and uncovered a roadmap to financial independence.
It's been a pleasure. These ideas can empower people to take control of their lives.
Me too. But before we wrap up part two, I want to circle back to financial freedom. What does that actually look like? Is it just about having money?
Collins argues that true financial freedom is about more than just money. It's about having the options and security to live a life that aligns with your values and passions.
So using your resources to create a life of meaning.
Precisely. It's about having the freedom to pursue your dreams, spend time with loved ones, contribute to your community, and live a life free from financial stress.
That sounds amazing. But achieving that level of freedom requires more than just following steps right.
You're right. It also requires a shift in mindset. You have to challenge conventional thinking about money and make choices that prioritize your long-term well-being.
So it's about aligning your habits with your values.
Exactly. He wants you to view money as a tool for creating the life you want.
This deep dive into the simple path to wealth has been incredible so far. We've explored the power of index funds, the importance of avoiding debt, and the strategies for building a life of freedom.
It's been a pleasure.
But there's still more to explore. Join us in part 3 as we continue our deep dive into the simple path to wealth and uncover even more insights into building a life of financial freedom.
It's amazing to think about all the possibilities that open up when you're financially secure.
It really is. And I appreciate how the simple path to wealth goes beyond just the numbers. It's about designing a life you love, with freedom and choice. And speaking of choices, Collins also emphasizes having a plan for withdrawing money in retirement, not just a withdrawal rate. That's a good point. It's not just how much you take out, it's where that money comes from.
Yeah.
And how you structure those withdrawals to minimize taxes and maximize income.
Exactly. He recommends starting with taxable accounts, then moving to traditional IRAs, and finally Roth IRAs, which are tax-free.
It's like a dance, making sure your money's working for you.
And he stresses that this plan shouldn't be rigid. It's about having a framework and adapting it as needed.
Yeah. Flexibility is key. And, we can't talk about retirement without talking about Social Security. It's a topic that generates a lot of debate. And there's a lot of pessimism out there.
It definitely has a reputation for being complex.
What's Collins' take on it?
His view is surprisingly optimistic. He argues that for those 55 or older, Social Security will likely remain a solid source of retirement income.
That's interesting. A lot of people are worried about the future of that. What's the basis for his optimism?
He points to the political landscape and the power of groups like the AARP. It's unlikely that politicians would make changes that would impact a lot of voters.
That makes sense. But what about those younger than 55? Is Social Security going to be there?
He acknowledges that changes are likely, but he doesn't think it's going away. Younger generations might see reduced benefits or a higher retirement age, but he doesn't see it collapsing.
So it's about managing expectations.
Exactly. And think of it as one piece of the puzzle, not the entire solution.
I think that's a smart approach. Now, Collins doesn't just focus on finances and retirement. He also emphasizes finding purpose. It's not just about being financially secure. It's about living a good life.
Yeah, I love that about the book. He talks about how retirement can be a time to pursue passions, travel, spend more time with people, maybe even give back.
So retirement is a chance to start fresh.
Exactly. He encourages you to view it not as an ending, but as a beginning.
Well, that's inspiring. Olivia, this has been such a great conversation. We've covered so much, from investing basics to the psychology of money and retirement planning.
It's been a pleasure. This book has challenged my own assumptions about money.
Me too. It's like he's given us a new lens, a lens that prioritizes simplicity and long-term thinking.
Yeah, it doesn't have to be complicated.
That's so true. So if you're looking for a clear path to building wealth and creating a life of freedom, I highly recommend The Simple Path to Wealth.
It could change your life, and maybe even how you think about wealth.
And that brings us to the end of our deep dive into The Simple Path to Wealth. We hope this has been helpful and empowering. Remember, the simple path might be the best one. Until next time, keep diving deep.